to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mark Greene, board chair of Curinos, to discuss helping financial services acquire, retain, and grow profitable customer relationships. It's great to have you with us, Mark. Welcome to Trade Talks.
Thank you. Great to be with you, Jill.
Let's talk about the banking industry. How is it performing these days?
Generally quite well. As you may know, banks have been reporting record profits, but there's some story to know behind that. They're really doing well for two reasons at the moment. One is they've been able to release some reserves as the economy's gotten better and the risks they face have gotten smaller. And the other is that certain parts of the banking industry are doing well, like the securities industry, wealth management. But underneath that, some of the core functions of banks, retail banking, depositing, lending, and so on, they're not doing so well. It's quite a weak time for banks in some of those core functional areas.
How is the banking environment changing?
Well, at the moment, banks are sort of in a position of a surfeit of deposits. There's quite a bit of depositing going on right now. So these excess deposits are something that they're parking at the Fed at the moment, or looking at low interest rate government securities for it. So that's not a really exciting part of the business, because normally you'd see something like 70% of deposits being lent out. At the moment, only about half of deposits being lent out. So one of the challenges at the moment is how do they grow their lending business? Another challenge that banks are facing is the pandemic has really emphasized a shift to digital channels, so-called neobanks that are really digital only. And how do conventional banks that are stuck with their bricks and mortar branches sort of catch up with that? And then finally, how do they make use of their branches? Right now, something like 30% reduction in transaction volumes at banks. As those transactions are moving to digital channels. So about a third of all new transactions are coming in through digital channels. And what's happening, the branches are sort of suffering as a result.
Yeah, it's so interesting. I have to tell you, Mark, I would say the majority of what we cover here on Trade Talks is fintech, of course, and neobanks fitting within that system. Yep. So we can see that here ourselves. Tell us about Curinos and how you fit in the ecosystem. What challenges and opportunities does Curinos see banks facing?
Sure. We're working with banks on a couple of areas. First, I just referenced the branch network. Something like 70% of branches today are sort of subscale. That's up from what used to be 40%. So one of the challenges we have that we're working with banks on is how do they rationalize their branch network? How do they place branches in the right locations? How do they drive more traffic into those branches? The second area we're working with banks on is how do they grow their lending business? Parts of corporate lending are recovering pretty nicely, but consumer lending is still quite soft because consumers are their balance sheets are in good shape, so they don't need a lot of loans. And that's really a challenge for banks that traditionally rely on lending as a prime source of profits. And then thirdly, we're working on how do they respond to these neobanks, these digital only or fintech players you just referenced. And there the challenges are, how do we drive the cost down so that the products are more affordable to consumers? For instance, banks are challenged with overdraft fees that consumers don't like. How should they rationalize those? How do they personalize the offerings so that it's more tailored to the consumer, like a lot of the fintechs are doing? And how do they sort of do this omni-channel experience, blending what happens in the branches with what can happen online? So three areas for banks really to be focused on as they try to compete with these neobanks.
Right, right. And another key theme that we've been covering is not so much us versus them, but kind of blending them together. You have the institutions that have the backing, and then you have the neobanks and fintech companies that can bring that technology to market quicker. So with Curinos, how are you actually helping financial institutions?
Well, one of the things you actually see in that regard is actually traditional banks sort of partnering with and sometimes acquiring these fintechs, right? So it's sort of co-opting the enemy, as it were. And we actually advise banks on what their plays are, particularly in the payment space. You can see that going on. But in general, what Curinos is about, we're a fairly new company just established over the summer as a merger of two entities, a banking database from Informa, a public company, the banking database sort of having key operational metrics on how banks perform, what are cross-sell ratios, net interest margin, et cetera. We combine that data with analytics from a company called Novantas, predictive analytics, actually. If a bank were to change its pricing schedule from A to B, what will happen to customer retention and customer profitability? So the combination that Curinos has of the data and the analytics is really helping banks become sort of the next generation bank. And our ambition is to be the, if you will, the behavioral analytics partner to banks as they evolve into the digital world.
Right, so interesting. Appreciate the insight. Thanks so much for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you, Jill.